Yeah, welcome students to this another session of accounts. We are completed with all the sums, solved example of our textbook. Now we are taking up revision. In the revision, we are doing past year question paper. Today we will be taking up 2019 final account sum. Ashok and Sanmesh are partners sharing profit and losses in the ratio of 2:1. From the following trial balance and adjustment given below, you are required to prepare the final accounts. Prepaid insurance. You see, prepaid insurance is appearing in the trial balance. So it will directly go in the asset side of the balance sheet. You need not subtract it from insurance. Insurance, it is an indirect expenditure. It will appear in the debit side of P&L account. RDD. The RDD given in the trial balance is an old RDD. I shall discuss with you what we shall do with it when we solve the sum. Discount. It is an indirect expenditure. It will appear in the debit side of P&L account. Postage and telegram, indirect expenditure, debit side of P&L account. Debtors and creditors. Debtor is an asset and creditor is a liability. It will appear in the asset, and debtor will appear in the asset side of the balance sheet and creditor in the liability side of the balance sheet. Salary, indirect expenditure. It will appear in the debit side of P&L account. Wages, direct expenditure. It shall appear in the debit side of trading account. Opening stock, debit side of trading account. Opening stock, one correction is there. In place of 192,200, you have to write 192,200 is wrong, only 192,000. It is a misprint over here. Carriage, it is a direct expenditure. Carriage will appear in the debit side of trading account. Purchases, direct expenditure, debit side of trading account. Sales, direct income, credit side of trading account. Return inward. Return inward is sales return, and return outward is purchase return. Purchases have a debit balance, so purchases return will have a credit balance, and sales have a credit balance, so sales return will have a debit balance. From sales, you will minus sale return. From purchases, you will minus purchases return. Bank overdraft, it is a liability. It will appear in the liability side of the balance sheet. Plant and land and building. Plant and land and building, they are asset. They will appear in the asset side of the balance sheet. Partners capital account. Partners capital account will be transferred to the partners account, and after balancing partners capital account, it will be transferred to the balance sheet liability side. Write off 8,000 as bad debt and provide RDD 5%. You see, bad debt is, I suppose it is not given in the question in the trial balance. So this is further bad debt. We will treat this further bad debt as bad debt is not given in the question. And this bad debt we will deduct from debtors. And second adjustment, this 8,000 will go in the debit side of P&L account. Provide RDD 5% on debtor. This is new RDD. After deducting 8,000 from the debtor balances, whatever amount remains, on that amount we will calculate new RDD. It is known as new RDD. Goods 16,000 were distributed as free sample. So good distributed as free sample, as it is in the adjustment. There will be two effects. One will be credit side of trading account, good distributed as free sample, and this type of expenditure is an advertisement expenditure. It will go on the debit side of P&L account. closing stock is valued at cost price is 224,000 and its market price is 240. Whenever cost and market price are given, we compare cost price with market price, and whichever is less, that value will be taken. So this 224 will appear in the credit side of trading account, and second effect it will go in the asset side of the balance sheet. Salaries were outstanding 8,000. The outstanding, it is still to be paid. So it will be added to salary and And the second effect, it will go in the credit side of balance sheet. Depreciate land and building. Land and building and plant and machinery. So they will be deducted from the asset, and second effect, it will go in the debit side of P&L account. These two adjustments we are not marking. Okay, now we start doing the sum. So let us one by one take each and every item in the prepaid insurance. It will directly go in the balance sheet assets. So asset, prepaid insurance, we will write over here. Prepaid insurance, the amount is, I suppose, 3,200. Then insurance, 8,000, it will go in the P&L account. Insurance, 8,000. RDD, when we take credit side, we will do it. Now, discount. Discount is an indirect expenditure. It will appear in the debit side of P&L account. Discount. Postage and telephone. Postage and telephone. Postage and telephone. 12,800. Debtors. We have marked it, so we will write it in the inner column. Postage and debtors. Debtors. We will write it in the inner column. It is 2,64,000. 2,64,000. Now we have marked it. Let us see the adjustment. Write off 8,000 as open. So less address. 8,000 as open. And 2,56,000. Okay. And this 8,000 we will write it in the P&L account. To that. This. Now, the second effect, provide RDD 5% on debtors. So, on this amount we have to provide RDD 2,56,000. 2,56,000 on it. 5% we have to provide is equal to this into this 12,800. So less new RDD. It is 12,800. And in the outer column, this minus this. Now this RDD we will add to the add new RDD. The amount is 12,800. So 12,800. We total it becomes 20,800. And from this total we will deduct less old RBT. When we come across it in the trial balance, we shall deduct it. This, when we will come in the credit side, no, we will deduct this amount. Then after this we have salaries. So salaries we have amount is 2,24,000. 2,24,000 we have salaries. Now in salary, since we have highlighted it, there is an adjustment we have written in the inner column. Now how much salary is outstanding? 8,000. Add outstanding salaries 8,000. It is 2,30,000. Now the second effect will be in the liability side. Outstanding salaries 8,000. Then we have wages 96,000. Wages wages 96,000 wages. Opening stock, there is a correction. I have told you 1,92,000. 1,92,000 opening stock. Right? Opening stock. Okay. Then next you have carriage 4,000. So carriage 4,000. Right, carriage. Then you have purchases. Who purchases? What is the amount of purchases? Purchases 7,70,800. From this, we will have to deduct less returns. What is the amount? You see, return, this is not the amount of purchase return. 36,800 is the amount of 36,800. In the outer column, this minus this. Now you have bank order, which is in the credit side, plant and machinery. Plant and machinery is set. Plant and machinery. Plant and machinery 96,000. Less depreciation. What is the 96,000? You see, land and building is 5% and plant and machinery is 10%. So 10% it is 9,600. 96 into 10%, it will be 9,600. So 9,600 we subtract. From this we subtract this. So, and this amount, depreciation amount, we write in the P&L account. So depreciation on plant and machinery 9,600. Then second we have land and building 7,04,000. 7,04,000 we have land and building 7,04,000. So less depreciation. Less depreciation. The depreciation amount is 7,04,000. and depreciation amount is 5%. It will be 5% on land and building. So is equal to this into this. 35,200. 35,200 is equal to this minus this. And this 35,200 we will mention over here. To depreciation on land and building. Land building 35,200. 35,200. Okay. Then we have partners capital. We will transfer these to partners capital account. Ashok 2,08,000 by balance brought down 2,08,000. And this is 1,92,000. Okay. Now we come to the credit side. We have seen all the items of debit side. Now we come to credit side. This is RDD. Old RDD, what we do? Less old RDD. 4,000 we subtract from here. So it becomes is equal to this minus this. 16,800. Then creditors 2,72,000. Creditors, liability side of the balance sheet. Creditors 2,72,000. Then we have next is sales. 12 lakhs by sales by sales. 12 lakh 4,000 I suppose. Let me check. 12 lakh 6,400. 12 lakh 6,400. Okay. Now less return. Less returns. Less return. What is the amount of return? You see, this is not the amount of sales return. 22,400 is the amount of return. 22,400. So outer column, this minus this. Then after sales return, we have bank overdraft 4,83,200. 4,83,200. This is bank overdraft, short-term liability, bank overdraft. Then we have capital account. Capital account I have written. Both the partners I have written. Now we take up the adjustment. This adjustment we have given effect. Both were distributed as free sample. So one effect, trading account by boards distributed as free samples. 16,000. And second effect would be this is indirect expenditure to advertisement. To advertisement. 16,000. And closing stock cost 224 compared with market value. Lower we will take 224. So one effect will be trading account, closing stock 224,000. Next in the balance sheet, closing stock Closing stock 2,24,000. Then salary outstanding here, this also here. So we are done with all the adjustment also. Now we shall balance. Credit side of holding account is equal to sum 14,24,000. Debit side total with 2, it comes to 10,28,000. 10,28,000. Since credit side is bigger, there will be profit. This minus debit side total 3,96,000. 3,96,000. This gross profit. What it is? Gross profit. So gross profit. Okay. 40 lakh. 4,000. So this gross profit we shall transfer to credit side of P&L account. By gross profit. It was 3,96,000. Okay. We make a total of it. 3,96,000. No other item on the credit side. Now all this inner column are transferred to outer column. Now we make a total of this. It is 3,33,600. 3,33,600. Out of this total, we shall minus this. So it is 62,400. How much it is? 62,400. This will be transferred to profit transfer to. One is Ashok. Yes, Ashok capital account, and it is Samesh capital account. Now, how will this be distributed? 62,400. 62,400. 62,400. 62,400. What is the ratio? It is given 2:1. So 2:1. So 2 plus 1, 3. One will get 2 by 3 and the other one will get 1 by 3 is equal to this into this. It is this much. And second one will get this into 1 by 3. So it is 41,600 and the other one will get 40,000. 41,600 and the other one will get how much it was? 20,800. 20,800. And the total is 2,96,000. Okay. We give this to this profit, we transfer to the capital account by P&L account. 41,600 and this is 20,800. What this plus this. This total also we will do. And since on the debit side nothing is there, we will to balance carried down. Here we will write 2,49,600 and here we will write 2,49,800. 2,49,600 and this is 2,12,800. Okay, this we will transfer to the balance sheet. Partners capital. Partners capital account. Ashok and Snesh. How much was Ashok? Let us see. 2,49,600. 2,49,600. The other one is 2,12,000. 2,12,800. So both the item we add and write in the outer column. 4,60,000. Now we are done with all the things. Now let us balance. Is equal to sum. We make a total of this side. It is 12,25,600. We make a total of this side. Let us see how the inner column outer side we have posted. I will make a total of this. It also comes to 12,25,600. 12,25,600. So, dear students, our balance sheet tally, and easily we have done the sum of 2019. So, dear students, practice it. Any problem, write to me on my number, WhatsApp number and mail ID. Please practice, keep on studying and stay home, stay safe. These days, the cases are also shooting up. So please work hard, study. Thanks for watching.